I would welcome you to join us for the next session as well. We now have with us Mr. Dinesh Aggarwal ji, who's the Managing Director at Panasonic, who has been very kind to support this summit, and we are very grateful to you, Dinesh Aggarwal ji, and we welcome you to speak a few words, please.
Thank you, Neetu, and good afternoon, everyone. It's a real pleasure for me to be here at the summit, and of course, a pleasure to be part of NAREDCO family. We've been having a very close association. Uh, for the reason for my speaking out today is not directly linked to the discussions that I've heard of, a few minutes ago, which is in terms of getting the post-pandemic India back, getting investments in, and of course the REITs and the successes of the REITs. I think the objective is really that we, as part of the ecosystem, would like to enable smarter infrastructure. Right? So Panasonic today is proud to have 3 operating smart cities, 2 in Japan and 1 in the US, Denver, Colorado, which are smart in every sense of it. And we actually flattened our factories, our erstwhile factories, to create these smart cities so that we can show that model to the world, that how you can create a community which lives comfortably, which generates and saves its energy, and which has a safe and connected living. So while on one hand, we will continue to sell high quality products, a wide range of products starting from electrical materials to sanitary ware to appliances and so on, as a one company, one source, one accountability, which is so required in the RERA regime. So, but it's not just the products, but it's the technology solutions that we would like to talk about. And we really hope that some of you will come forward and share this vision of ours and really help us create smart cities through various products and technologies that we have, where people feel connected, people feel safe, both from the health point of view, the quality of air they breathe, and then they consciously create energy and save energy, and of course, their homes are as comfortable as they can be with modern technologies. That's primarily my message for today, and I really wish you the very best for a successful summit, which is so topical, so interesting, and I plan to be there throughout. But I really hope that some of us will come forward and create a real smart city in India. Thank you very much.
Thank you, sir. Thank you for your message. Please continue to stay with us for the upcoming sessions, and thank you once again for all your support. I would like to call up our next panel, which is a critical panel on the pace of recovery of retail, which has been the worst hit during the pandemic. And before I introduce my panel, I would just like to remind the delegates to send their questions in the chat box with their email address. In case it's unanswered, we'll try and get the answers for you later on. I would like to call upon our moderator, Mr. Chintan Patel, who is the partner deal advisory at KPMG India. Chintan, do we have you with us? Chintan also leads the building construction and real estate practice at KPMG. Welcome, Chintan. Good to see you. We are very pleased to have with us Ms. Pushpa Bector. She's the Executive Director, DLF Retail. Pushpa has reshaped Indian retail through disruptive innovations. Welcome, Pushpa. Very pleased to meet you.
My pleasure. Thank you for having me over.
We also have with us Mr. Dalip Sehgal, CEO of Nexus Malls. He's an important person in the panel because they are backed by Blackstone. Welcome, sir.
Thank you.
We also have with us Mr. Shishir Shrivastava, who is the Managing Director of Phoenix Mills Limited. And under his leadership, Phoenix Mills has completed development of over 17.5 million square feet across retail, hospitality, commercial, and residential assets. Welcome, Shishir. We also have with us Mr. Rohit George, Managing Director of Virtuous Retail South Asia, India's leading institutional owner, developer, and operator of premium community-oriented lifestyle destinations. Welcome to you, Rohit.
Thanks, Neetu. Thanks for having me.
Over to you, Chintan, to take forward the proceedings, please.
Thank you once again, Neetu and Apriya, for kind of having me on this panel. And Neetu, you started off rightly saying that kind of this is one sector that has been hit really hard. And I'm really looking forward to an insightful discussion. We've got a great panel. So I'll jump right into it. See, what I understand, and I personally would love to kind of hear this from all kind of four of you, is how has 2020 been so far for you? And if you look at quarter one, which was your January, February, March, then we went into a lockdown, the first quarter of lockdown where a lot of things were shut. Then came the unlock piece of the third quarter. And then fourth quarter, we got into the festive season. I'm assuming for all of you, retail has been probably a roller coaster ride where kind of things were looking really good in January, February to where it ended. So why don't we quickly kind of jump into this and you know, if Ms. Bector, you want to start first, please?
Well, 2020 has been highly eventful. What we saw is that retail, as you know, was disrupted. Let's be clear, the disruption was there right from the time that the malls shut. But what we did notice is also that retail is a resilient community. They very quickly went on to understanding how do we stay in connect with the consumers. So, you know, the stay in with consumers was really more to do with this swiftly moved into omnichannel retailing and as a way of life. They have adapted to it. We, as a mall developer, we have seen when we reopen the malls, you know, our focus on safety, our focus on hygiene, which was there right from the beginning, which is really DLF's hallmark, stood us in good stead during this crisis. We also took a very clear leadership initiative in handling the crisis. We wanted to look at it as a way to save the industry as such, because as you know, within the DLF portfolio, we have a phenomenal number of small retailers as well as international brands. So we took that stand, and so far I can say at a very broad basis, retail is back in malls, up to around 70% in good properties in stable malls. In not so stable malls, it has come up to almost 55% now. So, you know, where let us say we were launching or relaunching that property, that's come up to around 55%, which is not bad. And this quarter, the festive months have started well. Quite a few.
So, Ms. Bector, sorry to kind of interject. That 70% and 50% is footfalls, revenues, stores opening. What do you mean by that? Sorry.
So, yes. See, you know, if I look at luxury retail has gone above 100%. Because international travel has been banned. So we are seeing a very different quality of consumers coming back and buying international luxury.
Okay.
On the premium mall side, you know, the good properties have gone beyond 75% on an average. When I mean on an average, quite a few brands have gone over 100% also. Some categories like athletic leisure, categories like personal care, things which are more required for work from home. So those categories have done very well. On an average, it's come up to 75, which we are very happy about, which means it's in sync with the kind of support program that we had extended to the retailers. So far, I would say that, you know, the touch and feel retail, brick and mortar retail is here to stay, and it is sort of growing well. However, the reality is omnichannel is also here to stay. So.
Sure. Thank you. Shishir, do you want to go next, please?
So 2020 has been quite a roller coaster, Chintan.
I can imagine.
I assume it's the same question to all of us, right?
That's right. I just want to understand, you know, has the experience been kind of very different? Because each one has a different footprint, a different kind of starting point, a different volume of business. I just want to understand, has the theme been same across the board?
Yeah, so we recommenced trading operations at our mall in Maharashtra in August, and of course, Bangalore was sometime in June. we've seen a very quick ramp up on consumption, and I think our experience is not much different from Pushpa's, and I'm sure it's pretty much the same across all good quality malls in the country. I'd like to say that November has been fantastic. We have at an average traded above 100% in the first couple of weeks compared to the same period last year. But of course, you can't compare apple to apple because Diwali was in October last year. But even if we were to average out October and November so far, we have seen consumption in the range of about 80 to 83% compared to the same period last year. So I would say that yes, retail as a business is quite, it's showing very positive trends. There are certain categories that have really outperformed. For example, electronics, when we reopened, was trading at about 120, 130% compared to previous year's performance in the month of August. And that has continued to kind of sustain. So we are seeing electronics, luxury, these are trading at above 100% compared to the same period last year. Fashion and apparel, which kind of had a very slow start. In August, brands were trading at about 19 to 20% compared to previous year. During October and the first couple of weeks of November, that has moved up and we are now averaging at about 75, 80%. So that's a very, very strong indication as well. I think the fact that, offices have opened up, restaurants have opened up in this period of time, bars have opened up, have allowed people to step out, buy some new clothes and, head out. Otherwise, nobody was buying fashion prior to that. So yeah, it's been quite positive in that sense. Another fantastic development was that in the middle of all of this, we launched our mall in Lucknow, a brand new mall in Lucknow. But we'll talk about that a little later.
Yeah, Shishir,
it's quite an interesting experience too.
That's definitely a question that I have on my list. I would want to spend some time with you on that. So we'll come back to that. Meanwhile, if kind of Dalip, any thoughts you would have onto that, you would want to add to what kind of Ms. Bector and Shishir had to say?
Yeah, so I was saying that basically there are 4 phases of this recovery. The first bit was between April and June, which was the restart phase. And I think the industry came together under the aegis of SKY, which is the Shopping Center Association of India. And we actually build a set of SOPs. And I think that's been very, very important in terms of assuring both the government at the center and the states to say, hey, listen, we are a safe destination for people to come and shop. And all these SOPs were pretty elaborate and they are now currently in practice. So that was phase 1, which is April to June. First set of malls opened in June. So that's the restart quarter. Quarter 2, which was June, from July, August, September, was the quarter which was really the rebuild quarter. Why do I say rebuild? Because all the malls actually opened. Yes, there were categories like cinema, etc. In some cases which were not open, but by and large, every single mall opened in the country. And the rebuilding process was not just business rebuilding, but rebuilding confidence and trust among shoppers. See, at the end of the day, we had to regain shopper confidence, otherwise they would never come back. Phase 3 is what we are in currently, which is, to my mind, the recovery phase. So if you look at October, November so far, I think everybody's voiced that. The numbers have been very, very good. October, November, better than what we expected. And I'm sure December will also be great. And then finally, at the end of the financial quarter, which is quarter 4, Jan to March, I think will be the return to normal quarter, where I expect that it will be back to 100%. Right? So these are the 4 phases, and each phase has its own peculiarities in terms of what's been happening. But 3 big points. One, I think the shopper has become far more determined in terms of what she wants to buy. So our bill values have gone up by almost 30%. Our number of footfall recovery is lower than our sales recovery. So let's take, if our sales recovery in November is 100% plus, our footfall recovery is not 100%, it is lower. And the reason for that is that, we used to do a lot of events in the past. So you used to get a lot of people who would come for events, would come for cinema, etc. And that's not happening. So you have a more determined shopper, that's one. Always ticket size is higher. Number 2 that's happening is the tier 2 cities responded far faster Amritsar, for example, reached 100% in month 2 itself, and so on and so forth. And I think the metros are a bit slow to respond from whatever numbers I can see. Even today, Bangalore, I think, is a bit slow, etc., etc. So that's the second thing, which is that shoppers in tier 2 cities were far more, let's say, into it faster than the others. So those cities recovered very quickly. So that's phase 2. Phase 3, in terms of what else has been happening, I think category-wise, whatever people have said is absolutely right. I think most categories have recovered, but even today, the ones that are suffering are cinema, entertainment as a category, cinema, FECs, and to some extent even F&B. So while F&B is recovered, the recovery is slower than the rest of it. So I think the key takeout really is that as soon as you can build confidence among shoppers, you recover, and you recover pretty quickly.
Okay, great. Thanks, Dalip. Rohit, sorry to kind of come to you the last, but anything you would want to add to this piece?
Sorry, I was on mute. But no in terms of trends, it's similar. I think a couple of things which we need to keep in mind. And just to answer your question in terms of how performance has been across 4 quarters, right? And we've had a calendar year to go, and we have 30 days to complete the year. The first quarter we were on track, but as you know, every center was shut between the 12th and the 18th of March. So we lost between 12 to 18 days there. But apart from that, we were on track. Quarter 2 was a wash for everyone because we were shut. Quarter 3, it depend on where you were in terms of flag. In Punjab, we had 2 centers. Saturday and Sunday, they didn't allow us to open, which is a state government directive, which is really a big shopping days. So that obviously did affect things, but consumption sort of picked up across all of our centers. And quarter 4 has been spectacular. In fact, if I look at our November numbers, 2 of our centers, which are non-metro centers, they've done 200% of pre-COVID. So that's been superb. The West, in particular, has been great, which is our Nagpur and Surat center. North, we have 2 in Punjab. They are over 100% in November, which has been great. Chennai has also done extremely well. We are about 120% in terms of November numbers. So these are consumption numbers. But I think the one thing is footfalls have been 50 to 55% of pre-COVID. But to be honest, we're not really concerned with that because entertainment was shut, cinemas were shut. We just started sort of opening up all of that. I think gradually you will see numbers, but I'm also a bit cautious here because at the end of the day, all this depends on what the governments do. Cases are going up, and we are hoping, and we are seeing this already. In fact, last weekend in our Surat center, we had the state government shut us down over the weekend, right? So it's taken 9 months to get back to some sort of normalcy. But having said that, I think the governments need to be a bit cognizant of what it takes to get back in terms of normalcy. So any further shutting down of our businesses is not going to be helpful for anyone. So assuming that things go as per plan, cases are what it is, I hope that the first quarter, which is calendar year 2021, will be similar to what we did last year.
Okay, thanks. So basis what I hear from all 4 of you, it seems like we're having almost a Black Friday quarter, right? Where technically rest of the year was a washout, and this is the quarter when we get back to black from being red for the remaining part of the year. Is that a fair statement to say? Because all of you seem to say that the festive season has been good, sales are on track. What's the general view, Rohit, on that?
Look, I think we went in opening thinking things would not be so bad, right? To be honest, when we went in June, July, the numbers were very disappointing, both footfalls and sales. And you speak to any retail company in terms of their projections of business plan and how it was planning out between Q2, Q3, Q4, I think Q2 was a disaster, right? people were not coming, people were not shopping, there was fear, there was all of that, right? People were banking on the festive season, but October, November has been great. So I think coming from the Q2 and Q2 numbers in both consumption and footfall, and looking at how things have sort of grown and grown exponentially, right? Far more than what we projected going into Q2, right?
Okay.
I think that's been a positive surprise, and we'll take it. So I think it's been good.
Good, thanks. Dalip, to the point that Rohit just mentioned, right, that states like a few cities in Gujarat went under a lockdown. They had the weekend lockdown. I understand there is the 9 to 6 curfew that still stands. What do you see as an impact going forward with changes that there could be a second wave, third wave? While I know you're expecting the first quarter of next year to be kind of a normal one, how are you guys planning and looking at this?
So I think it's a little difficult to plan in a sense that, what happened in Gujarat came as a bit of a surprise. Suddenly there was a curfew over the weekend. Now I think the curfew thing is extending to other states as well. So currently we have a curfew in all the large cities in Rajasthan, Madhya Pradesh, and gradually I think it's gone to Punjab. Yesterday Punjab announced it. So in a sense, it's very difficult to plan for it, because you don't know when this is going to happen. So I think this has been a year where you have to react to what happens, honestly. And so the shopping hours are going to get cut, and it has a pretty severe impact in terms of business, especially when weekends are shut, it has an impact. So what you try and do is try and make it up for whatever it is worth in the timing that the malls are open. But believe me, it's been a very hard grind to come to where we are. We clearly understand that there is also an issue because the number of cases in these states have gone up. So we are with the government in terms of saying you need to be careful. But to my mind, shopping centers are probably the safest place currently if somebody has to go and shop. All the SOPs are in place, whether it's distancing, whether it's masks, sanitizing, we sanitize every hour. So all that, our endeavor is always to make sure that we speak to the local authorities and tell them that, look, we are safe, and we hope that in the future, governments, especially the local administration, will take a more lenient view.
Okay. And Dalip, in situations like this, does your CAM go up? How do you plan your people in terms of the staff that is required on the floor? How do you manage the whole thing with all the uncertainty that's around here?
So two things. One is that you don't know how long it's going to last. So it's very difficult to cut down, your numbers. So by and large, you retain what you have. What happens essentially is that instead of working longer hours, you would work shorter hours and you would probably do one shift. But our endeavor has always been to make sure that people are still on the payroll. So just to give you a sense, and this is an industry that employs a large number of people, right? Sure. We are currently at about 90-95% of pre-COVID levels in terms of employment, including contract labor. So our endeavor has been that, look, we should not, as far as possible, let anybody go. I think everybody faces the hardship, so it's important to keep them employed. But yes, we have to make sure that at that point in time, we reduce the shift hours and so on and so forth. As far as scam is concerned, I think, it's a temporary phenomenon, honestly, Chintan. So my view is that I think we have to take it in our stride. There are some positives and some negatives in terms of cost as far as scam is concerned, but it will all average out over a period of 12 months. So I don't think we should get too hectic about it.
Okay. Thanks. Shishir, I think the question that I said I really wanted to ask you, you are one of the few ones that opened up a very large, I think 1 million+ square feet mall in Lucknow. And this was just as we were getting out of the lockdown and people were very, very negative about the whole retail scenario, footfalls and everything. What was the thought process? And I know probably a lot of it was already done, and I don't know if you had to open it or you thought that it was still going to work out well. What was your experience on opening up the mall in Lucknow?
We had acquired this brownfield, partly built mall sometime in August of 2018, and by March of 2020, we were ready to commence trading. In fact, we had the launch date for the 14th of March, and about 3 or 4 days prior to that, We had discussions with some of the larger retailers, and we communicated that we will delay the hold because the opening. Because we were anticipating some kind of government action. They had already announced that multiplexes would have to shut down for some period of time. So for us, frankly, all the investment was already in. For our retailer partners, their investments were all in, and fit outs were at various stages of nearing completion. We also have a smaller 350 odd thousand square foot mall in Lucknow under the brand name of Phoenix United. When the UP government permitted malls to recommence operations, we saw the performance of that small center, and that gave us a lot of confidence that shoppers were stepping out, and they were going out and looking at making big purchases as well as small. So that gave us a lot of confidence to open up this mall. And quite honestly, we wouldn't have been able to do it unless our brand partners supported us through that period and opened their stores along with us. So it's been a very, very positive, I would say, experience there. This mall has been operating since middle of July, and we have already exceeded the trading density, the sales per square foot per month of more than 1,000 rupees in the last period of, I would say, October through November. And it's about 65% operational in terms of trading, stores trading. There are about 30% of stores which are at various stages of fit out, and every week we're opening 4, 5, 6 stores across categories. So it's been a very positive experience there. But we've also been, I would say, we've been very cautious in, promoting and marketing the space. We saw it as a gift to the city of Lucknow because this is truly a magnificent center for Lucknow, Kanpur combined. And it's an incredible experience. I would go to the extent of saying one of the best design malls in our portfolio today. So it's truly a destination center in the heart of the city, and it drives a lot of footfalls. But we've been very cautious in keeping density.
And Shishir, where are you in terms of what you had projected at the start when you were looking at opening this mall, and it seems like everybody had a better than projected. Was that the same experience when you opened this mall, that you had a certain projections of footfall, but what turned out was better than what you had expected, or is it in line?
So, Chintan, honestly, there was, I would say that there was no scientific way of projecting what FY21 or H2 of FY21 was going to look like. You may be aware that we raised some capital. We did a QIP at a level sometime in August, and I think our estimates that we had shared during our roadshows with potential investors have panned out pretty much how we had envisaged. We had anticipated a fairly strong Q3, and I would say estimated, as Dalip mentioned, a reversal to normal trading in Q4. And it was based on these projections or estimates that we had also negotiated waivers with our brand partners. So it's very satisfying to see that business is panning out how one had anticipated.
Okay, great. Thanks, Shishir. Ms. Bector, coming to you. You mentioned omnichannel, right? How has the whole digital e-commerce omnichannel play been for you guys? Because I think a lot of kind of naysayers on brick and mortar retail are saying that e-commerce is the way going forward. And a lot of people will move to that, and that we've seen in other parts of the world, India being an exception to the norm. What is your view on all of this, please?
So, Chintan, that's a good question. It's a question that we all cannot look at the crystal ball and gaze and come up with an answer end to end. But what do we see as a trend is that, in the Delhi NCR or in South Mumbai, etc., the key markets of India, our thinking is that the brick and mortar will resurge and the pent-up demand will come back. purely because it's lifestyle driven. All these centers had pivoted towards better lifestyle, and all the events that one used to do, or the kind of food and beverage brands one used to have, is all pivoting towards improving lifestyle of consumers,
Sure.
which is not possible in the online space. So our thinking is that those centers which are pivoting towards lifestyle, those will remain popular post the vaccine. The pent-up demand will resurface in a big way, and
Okay.
it shouldn't really get impacted. However, where omnichannel comes into play is for the fashion retailer. Now, if you look at, let's say, a brand like Zara.com, Zara launched their own website. They have a click format in which they actually encourage consumers to come to the store to collect their merchandise. That's an option. We have seen that after Zara.com was introduced, it's not as if the Zara sales per square foot has gone down.
Interesting.
In fact, it has only gone up during,
Good to know that.
And yes. So, however, we do think that there will be many brands who would come to us and ask for hyper local differentiation in revenue share. That is something that is bound to happen. We need to be, as an industry, prepared for that and come up with a very fair way of approaching that, because malls cannot become logistics center. But we
Right.
do have the advantage that the last mile connectivity can be through this property, whichever is a local property. And we've seen during this pandemic also, people were not getting deliveries on time. So I think it's important for mall developers to understand that we have to focus on improving experiential retailing even more, in order to ensure that we don't end up being a logistics spot for
Sure.
omnichannel centers. Having said that, we are engaged with most retailers, and we have a very clear understanding of how business has to be transacted when it comes to sales through hyperlocal last mile connectivity for the retailer. He will have to pay the same revenue share to us in case this sort of an approach is adopted by the retailer. But I do see good brands are very, very cognizant of the fact that they don't want to dilute brick and mortar experiential retail. They don't want to. It's only the smaller ones possibly who would want a quick profit for a particular quarter, which one needs to be cognizant of. So it will be a matter of coexisting. It will be a matter of negotiating, and it will be a matter of understanding what the consumer is looking for. Let's not look at the world only till the vaccine. We have to look at the world beyond vaccine.
Sure.
And that's the world that we should be prepared for. And which is why we at DLF, we looked at this whole year. We treated it as a gap year. And our thought was, like Shishir rightly pointed out, our thought was to give them a support through every quarter in a graded manner, in such a way that as the sales come back, their waivers or support reduces. So far, we've been on point. And I always like to think that one should be cautiously optimistic. Yes,
Good.
October and November has been very good. Having said that, till the vaccine is well distributed, which would be sometime now in April or May, we really need to adopt that cautious optimism all the way through, ensure that our safety is the main focus. And hopefully then by June, July, we predict that omnichannel or no omnichannel, the pent-up demand would be so high that people will come back in a big way. But one thought on this is that where tier 3, tier 2 cities are concerned, things may change, because over there, they have understood the power of DigiWallet for the first time in a big way.
Right.
And they have understood it across age categories. So one needs to wait and watch to see how consumers will behave through the power of DigiWallet. Will they go online in a larger proportion to what was predicted earlier? That the jury is out there. None of us can really predict.
Completely agree. One quick question, and I just want kind of everybody on the panel to kind of opine on this. How has the tenant-landlord relationship been, right? Because a lot of chatter was around kind of, a lot of tenants coming back at the table, wanting waivers, deferments, negotiations, change in the model, MG to revenue share. a lot of chatter has been there. What has your experience been in this sector? So I don't know, because it's a slightly loaded question, probably.
So, I think we went through, and I must share with you, I started my malls business with a crisis, the Lehman Brothers crisis. So I had that experience, with me, and I'd seen how tenants behaved then and how they have evolved. So we looked at it very differently. We said that, listen, we are here to support you. We are here to support the industry. We went in a very transparent category by category manner on how we would like to support. And once we lent that support, we have not budged. I can tell you this, we haven't budged. And they have also appreciated the support. And they've sort of, understood that, yes, we've been fair and we've been transparent with them. And it's not been fractious at all. Touch wood on that. It's been a case wherein the relationship has strengthened. We also did a lot of risk analysis during lockdown. We knew which companies can buckle. For example, certain food and beverage operators who were leveraging or over-leveraged in terms of their investments, we knew would be in trouble. And so far, our risk analysis has been on point too. So what I'm saying is that it's really to do with every category, and it is to do with groups or the particular entrepreneur. But otherwise, by and large, I would say 90% of the cases, it's been smooth.
Interesting. Dalip, how has your experience been? Again, does it really change with kind of you being under the Blackstone umbrella as opposed to a DLF umbrella? And did you have to take a different call, or how was it for you?
So I think most people, there was a phase of negotiation, but honestly, if you ask me, that was the tail of the dog. And while yes, we agreed, waivers, etc. To my mind, the bigger issue over the last, let's say 8-9 months has been how do we work together with retailers to build back the business. So our focus really, Chintan, has been around that, saying can we do joint activities in the mall? We have a large atrium free today where we used to do events. Are there pop-ups that we can do? Is there something else that we can do in terms of marketing within the mall, even outside? We now have started spending a lot of money on press advertising, where all our retail partners are there, etc., etc. So I'm saying, to my mind, yes, there was a phase where negotiations seemed to be the paramount thing as far as relationships were concerned. But honestly, if you ask me, last 5-6 months, really, it's been all about jointly trying to rebuild business. And I guess that's the way it will be as we go forward. Yes, there'll always be some categories which will be still under stress, and we need to figure out what is a fair way of sharing their pain. So, for example, if you take cinema, cinema is at a 1-2% recovery today. So while all of us are happy with 100% recovery, cinema's recovery is 2-3%. No titles, no software. Until Jan, nothing will happen. So I think you have to take a very different view of what you do for the cinemas and how long you do it. So I think we've approached it from that perspective, but suffice it to say, I think the relationships have by and large remained intact, and in some cases, in fact, improved also substantially. And going forward, I think that's the way to go.
Sure. Rohit, how has it been for you?
Yeah, I think the clear testament of how well all of this has played out is how many of your retailers are open with you, right? And I'm sure between all of our portfolios, we have most people open. So if there's 100 that is supposed to be open, I would say 99 is open. You always have the 1% here and there. Having said that, I think our approach has been a bit different. We have looked at the support in terms of brand and balance sheet of brand and the industry within which the brand operates. Right. Okay. So necessarily we haven't given the same deal to, let's say, F&B operator or cinema operator. I think it depends on what the balance sheet of the brand is, how much rent are they paying us, how much rent were they paying us, what is mark-to-market rents, and all of that. Look, we also need to keep in mind that at the end of the day, there's an opportunity at the end of all this, right? So we've sort of looked at this brand-wise, but I think overall we have been very supportive. The people who've needed help, we have given them all the help that we could have given
So
them.
you've done basically case-to-case basis as
Absolutely.
opposed to a general stand across the board. We either don't give anyone or we give X% to everyone. That's not been your...
No, absolutely not. And we have gone and done this retailer by retailer.
Okay.
But I must also admit, Pushpa has made all our jobs much more difficult, because she went out up front and gave this phenomenal concession to all the retailers, and that was the benchmark, and we had to negotiate that, right, on basis of that. But yeah, but it's been fun. It's been a good ride, and like I think what Dalip mentioned, we've really looked at it in terms of how we can sort of improve throughput with all of these retailers, what we can do. And as we were having the negotiation, it was not really so much about negotiation, but it's about how can we improve and increase business, right? Whether it's quality of stores, whether it's fit outs, whether it's promotions, whether it's digital, whether it's sharing databases, all of these things, right? And that's what I think that's the good thing which came out of the entire 6 months of interaction.
I think Rohit, I'm just being a bit cognizant of time. As much as like a TV anchor, I'd like to give Pushpa a chance to kind of retort back, but I'm going to leave that right now. Shishir, quickly, your kind of 30 seconds, because I have one more question for all four of you. So 30 seconds if you can spend. Have you changed the model from a highly MG to a small revenue share model to a higher revenue share small MG, or have you changed the model for you? Shishir?
Yeah, sorry. Our model has not really changed. In fact, we had in 2007-8, when the world was going through hell, that's the time when we had moved to a combination of a rev share or MG model. So that has not changed. While we have, just in continuation to the negotiations that we've had with retailers and brands for this interim period, we have been able to, explain to them that we should have some kind of a catch-up option, since we are giving some discounts and waivers for the period of mall shutdown and remaining part of FY21. So in most cases, we have a higher revenue share extending into FY22 and perhaps some part of FY23, just to catch up on that. But our model has not changed at all.
Okay, perfect. Thanks. I think time's up, but I'll take kind of one last minute, and I'll just say one question if you can just answer in yes and no. Shishir, are you continuing to invest in looking for more malls? Will you continue developing more malls?
Yes, we have projects underway, so those are ongoing, and we will be looking at acquisition opportunities sometime towards the end of this financial year, once we start seeing business cash flows normalize.
Okay, Rohit?
Yes, very actively.
So you're still looking at more acquisition opportunities?
Yes.
Okay, Dalip?
Yeah, we are in the midst of a transaction, as you know. So hopefully that closes quickly. That will add another 9 malls, 4 million square feet. So we are very upbeat and very optimistic about retail in India.
Okay, and Ms. Bector, for you? I don't know if Ms. Bector is there. Okay.
So I said we are looking at more mixed-use developments, and yes, we are in the process of looking at developing some interesting mixed-use developments in Chennai, in Gurgaon, etc.
Okay, so mixed-use malls could probably be the norm for future, as opposed to standalone malls. Okay, great. Neetu, over to you. So firstly, I think before I hand it over to Neetu, thank you very much, all four of you. I think it was a very insightful discussion. I would have loved more time to kind of discuss a few more things, but I think in the interest of time, I'm going to kind of step back and hand it over back to Neetu. Neetu, please.
Chintan, thank you so much for so deftly moderating this very important session. And honestly, it was good to hear that, retail has found its cheer in the gloom. So all the best to all of you. And thank you so much, speakers. Really appreciate your time. Do try and join us for the other sessions and tomorrow as well.
Okay. Thank you. Thank you all once again.
Thanks, everybody. Thanks, Chintan.
Thank you. Thank you, Dalip. Thank you, guys. Bye.
Now I'd like to show you the opportunities which are possible with Panasonic, HDFC and PNB. So please do stay on with us. Can we have the AV, please?